Hello and welcome. If you're running a business in Nigeria under a registered business name or thinking of incorporating, today's video is actually for you. Now we're going to explore the difference between a business name and a registered company that is limited by shares. A lot of people have reached out to me regarding this new tax reforms, saying, "Oh, Joyce, I just registered my business with a business name. Should I upgrade to an LLC or should I just remain?" So we need to understand the difference between the both of us, so we can actually make an informed decision on if we should upgrade or just remain a business name. So we need to look into the pros and the cons of the both of them. But before we proceed, let me just quickly introduce myself to you. My name is Joyce Obiako. I'm a chartered accountant with over 10 years of experience in accounting, auditing, tax, and finance. I've worked with government parastatals, I've worked with private companies, and I've also worked with multinationals in US and Canada. So yes, I bring to you 10 years of quality global finance. So now let's dive into it. On June 26, 2025, President Bola Ahmed Tinubu introduced new tax act, reforming our Nigerian tax act, which consolidates and modernizes many laws in Nigeria, one of which is the PIT, the CIT, the CGT, and the development levy. So now let me break it down. PIT, that is personal income tax; CIT, company income tax; CGT, capital gain tax; and the development levy. Now, a lot of people have reached out saying, "Oh, Joyce, we had, companies with turnover less than 100 million naira, and they don't have to pay tax whatsoever. So let me just switch my company from a business name to a company limited by shares." Now, first of all, you need to understand that even if you switch over to a limited company, to a limited liability company, you still have to pay your personal income tax, because definitely you're going to pay yourself as an employer, as a director. You're going to pay yourself, and when you withdraw from your company, you're going to pay taxes on those withdrawals. So you need to understand that, because you're going to migrate into a company limited by shares does not mean that automatically you still pay for VAT. You still pay taxes. So you need to understand if you should do that or not. So now, what is a business name? What is a company limited by shares? A business name is seen in the law as one and the same as you. Like a business name, you just want to register your company. Maybe you're just a small company. Maybe you're just like an accountant, like myself. You have your own, practice or whatever it is that you do. You're just small. You're just starting out. Fine. Starting out as a business name is a great way to start. But then, when you grow, as you're growing, you need to now migrate into a company limited by shares. That does not necessarily mean that you have to start out as a business name. Okay, so if you're a business name, what makes you different from a limited liability company? A business name is seen as one as the same as the owner of the company. You are not separated. But a company limited by shares, already, as the name goes, limited liability company, your liabilities are limited. Let's say you get a loan from a bank for a certain amount of money, and then something happens to your business and you can no longer pay that loan. Now, the amount you use in registering, let's say your company is just limited by shares of 5 million naira, you're only liable to just 5 million naira, and that is just what you are going to pay in case of maybe your company is winding down or something, because people need to understand. So the bank cannot actually come for your personal assets. But if you are a business name, then the bank will come for your personal asset, because you and your company are seen as one entity. So don't just say, because you're trying to avoid tax and then you go. And you need to understand what a company limited by liability is all about. Now, if you're registered as an LLC, now you need to understand that does not mean that you will not pay your tax. You still pay what is called a PIT, because yes, you have to pay, and then you have to go through the stress of being a company limited by shares. So yes, a business name is easier or cheaper to run, but an LLC is more expensive to run, and there's a reason why. So as an LLC, you can have other partners, other people that you come together to form the company. Yes, this is our company, and then we're limited by shares by the certain amount that was written in the company's document as registered with the CAC. Okay, now Now, what is this PIT tax? The PIT tax is actually progressive. Now, the new tax is actually progressive. Like, okay, if your income is maybe about 800,000 and below, you don't have to pay taxes. But if it's above that, then you have to pay taxes, and it's progressive. Like, okay, there's a structure for it. If it's around, there's a structure for it. Now, on the first 800,000 naira, the tax is 0. Now, it's progressive, like I said. Then the next 2.2 million naira, that is annually, the taxes on it is 15%. Then the next 9 million naira, the taxes on it is 18%. Then the next 13 million naira annually, let's say, this is what you earn, your income annually, 21%. The next 25 million naira, 23%, and the next 50 million naira and above, 25%. So we need to understand how this affects us. Now, there's a way. If you have a qualified tax consultant like myself, will help you break it down and explain to you what your tax implications are. Now, it's not just that, like someone reached out to me the other day and said, I earn 2 million naira, and they're telling me, my tax is going to be up to like 500,000 naira. First of all, I don't know where you guys are getting all this information from, but you need to understand that there are some reliefs that needs to be deducted from your income before you have what is called your taxable income. So it's not because you earned maybe 2 million naira in a month, for people that work remotely and all of that, or maybe your annual income is 10 million naira, and then your tax is actually calculated based on your 10 million naira. There's what is called reliefs that was also introduced in this new tax reforms. One of which is you have your rent relief, you have your NHIS relief, you have the NHF relief. You also have your pension that has to be deducted from your revenue before we now determine what your taxable income is. So yes, it's not like maybe from your and other expenses that were incurred in the process of earning your income. We have to deduct that, then we can now ascertain what your taxable income is. Now, from that taxable income, that is where we would now introduce this tax band. Now, if out of the remaining of this taxable income, now what is remaining is just 800,000 of your taxable income, then you don't pay taxes. If what is remaining is just 2.2 million, then what will be deducted will be 15%. Now, if it is 9 million and above, 18%, 13 million and above, 21%, just like that, just like I previously mentioned. So now it is very, very important for us to understand this. Now, but if you're a business owner, you still pay your PIT and you fall under this tax band. Now, but if you now decide to register as an LLC, you still pay PIT because you still pay yourself as a director, and you still pay your staff. So you guys still have to, pay your personal income tax, which is self-assessed. Another rumor that is going out there is, the government is going to deduct taxes from your account. Please, that's not true. The government is not going to deduct taxes from your account, but it is very, very pertinent that you have your tax ID as a business owner. Every business owner must have their business ID, and you yourself must have your own personal income tax IDs. So it is very, very important that we have this, because even the bank has given a circulation that from January 1st that every bank account is going to have the tax ID or their NIN, and it must be linked to the account. So yes, you must have your ID as a tax-paying citizen. So yes, Nigeria operates a self-assessed tax system. That means you have to assess your taxes from your revenue, and after you've deducted the necessary reliefs and whatever expenses that you incurred in the process of generating your revenue. After you've deducted all that, then you know what your taxable income is, and then you now pay your taxes based on your taxable income. So Nigeria operates a self-assessed tax system. So this rumors going all around saying, the government are going to deduct taxes from your bank account, please, is not true. Let's not buy into all of that. So it is very, very important that we make informed business decisions. So now, after hearing this video, now should you now migrate to an LLC? Now you need to understand like the importance. Now, if you migrate to an LLC and your revenue is like higher than this tax band that I just previously mentioned, yes, you should migrate. But if you're still a small business owner, what you're earning in a month is just still very little, you're still trying to just put yourself together, why should you migrate? It's more expensive migrating to an LLC. because now you now have to pay tax to both the federal government and the state government. But if you're just a business name, your tax actually goes to the state government. So you need to understand all this. And in my next video, I'll go deeper into how we can actually calculate these taxes and how, we can actually make informed decisions. It is good to pay our taxes, but you should pay your taxes based on what the law says your tax should be. So till I come your way next time, please like, comment, and subscribe to my channel.